What's up, everyone? Jonathan here with the Venue RX. And on today's show, we are going to be talking all about the numbers. And I'm really excited for today's guest. We're going to get into her in just a moment here. But on this show, if it is your first time joining us, we are focused on all things wedding venue related. And we are really passionate about documenting and sharing best practices for building, owning, operating, managing world-class wedding venues. And so such a huge part of that is the numbers and understanding what the numbers mean and how the numbers relate to your business. And so we were looking at some podcast guests, and we were really excited to be bringing Danielle Hayden onto the show today. Thank you so much for being here.
Thank you for having me here. I love this topic, and I know it can feel really heavy and not sexy or exciting, but it's the lifeline of your business. And I promise I'll make it as exciting as possible.
You're listening to the Venue RX podcast.
Yes. Well, I mean, we were just talking before we started, sometimes this boring stuff, the zoning and the financials and all of that stuff, it really goes into creating a really successful business. And you can't even get to the marketing and some of the other stuff, unless you have this portion of the business locked in. You're also a podcast host, correct? With the Entrepreneur Money Secret Stories?
Yes, Entrepreneur Money Stories.
Money Stories, my bad.
Yep, launched about a year and a half ago. Yeah, very exciting.
Very cool. So what do you do on that podcast? Like, what do you talk about?
All things money and money mindset. So one thing I wasn't expecting when I started this business 8 years ago, I came from corporate accounting. So I was a CFO working with investors and board of directors. So to me, like, it was pretty black and white. Like, this is the data. This is the decision we make with the data. And I had no idea until I started the business that there's so much emotion and money mindset that goes into our business decisions as entrepreneurs. So we tackle all things money mindset, and then strategies on how to look at your finances, diving into all the hard topics like how to hire, when to hire, budgeting, all those really difficult topics, just breaking it down and making it fun.
Awesome. We're going to be talking about some, I think, practical sides of things, very tactical stuff today, just talking about metrics and KPIs and different things like that. But I want to ask just really quick on that topic and maybe a teaser for everyone. And I'd love, if you're listening to this, hop on over and check out Danielle's show. It was Entrepreneur Money Stories. I messed it up in the beginning. So I just want to make sure everyone's got that. And we'll put links to that in the description. But I wanted to know, are there some common mindset pitfalls maybe, or common mindset traps that people fall into that you constantly see yourself identifying and kind of reverting back to helping people solve?
Yeah, the number one that I see is avoidance.
Okay.
So avoidance is the number one mindset issue. And some people, and that's why I want people to work on your money mindset, because if you can identify, I tend to avoid this topic because it's difficult for me, then you can use strategies to help yourself, right? Like we've developed different strategies with our clients over the years. So for one of our clients, we meet on the third Friday of every month. It is our consistent weekly or monthly meeting. And she tricks herself. So she goes to the coffee shop and she buys herself a fancy coffee, and she makes this whole outing. And then she has her Zoom call with us. And then she spends an hour after our call to digest the information, reflect on it, and decide if there's any decisions that need to come from that meeting. So you can make it fun, but the number one issue is avoiding the topic completely. And we have clients who come to us who have been into business for years, and have never put together their books, or they only do it at tax time. And you can't run your business. You can't make good business decisions. You can't even do effective tax planning without knowing your numbers throughout the year. But because we're scared of this topic, because we don't understand it, it might not be our zone of genius, we avoid it altogether. Then we show up to our tax accountant's office and you're cussing him or her out because she just told you have this big tax bill. But it's not their fault that you avoided it throughout the year and did not make the business decisions or the tax planning strategies.
I love that. And it's funny, I was chuckling in the beginning when you said avoidance, because that's been me. at so many different junctures in our business. My wife and I, we started a staffing company that turned into, now we sold that, and now it's venue management, and it's under the same brand name, but that's been over the last 10 years of what we've been working on. And I've got to tell you, early on, I say early on, probably up until like 2 or 3 years ago, I was petrified. Yeah, I was just like, I don't want to, I don't know. I don't have a good understanding of actually how to interpret some of the data. I knew, how to click the button on QuickBooks that generated a P&L and how to generate the balance sheet. I knew how to do that, but I didn't know what all that stuff meant. And so I would totally avoid it. And you're totally right. Come tax season, put everything together. Oh, realize we haven't reconciled, our bank accounts for the whole year. And, so if you're listening to this right now or watching on YouTube, it's okay. If this is you, we're going to start here and then we're going to build on this. But Danielle, what is this business? Because I'm realizing we talked about the podcast, but what is your business? And kind of take us back with your accounting background, touch on that a little bit more, give us a little bit of an origin story, how you got into this industry.
Yeah. So my business is Kickstart Accounting, Inc. I have a really rocky road into entrepreneurship, like so many of us. I actually started my career as a hairdresser. So talk about creative brain. Decided that I fell in love with the number side of being in a salon and understanding the numbers of how to hit our goals, how to hit our metrics, and really working with the rest of the salon to understand that. And I mentioned that because a lot of people say to me, well, I'm a creative, or, that you have that side of the brain. I don't have to know numbers because that's not my side. So that's not true, right? We can tap into both sides of our brain. And I ended up in corporate accounting, working as a CFO, helping the, management team, the board of directors, the investors on the finance side make better business decisions and ultimately grow the business.
Really quick question about that. There's a big jump between hairdresser and CFO. How did you go from there?
Where did it go? I was going to school as a hairdresser to own my own business. So I was in school for business management. I ended up getting my master's degree in accounting and financial management. So as I was working as a hairdresser, I was really in tune with the business side because I was going to school for business.
Got it.
Worked my way up through corporate. So I'm no special story there, right? I left the hair salon, went into corporate as an accountant and worked my way up through that corporate ladder. However, I'm not one of those people that I hated corporate and that's why I left. I freaking loved what I did. I started at the bottom. So I understood how to do the nitty-gritty bookkeeping, how to set up an accounting system, really working through all of the details and worked my way up through strategy. So at the end of that section of my career was the strategy piece and the strategy component. And so when I left corporate accounting, I really left to go on a mission to help other business owners with the strategy piece of their business. I didn't understand at the time that most entrepreneurs, most business owners didn't have bookkeeping in place, or they didn't know that they needed it, or they did it, but they only did it for taxes. So I went on this mission to help business owners use their financials to make business decisions and make these strategic decisions in their business. And I quickly went to a halt because if we don't have bookkeeping, right, if we don't have correct financials and the right accounting system, we can't get the numbers. So we had to pivot in our business, which I like to tell that story because it's a good reminder that just because the business we set out to have is the business we need to stay in, we can pivot and we can move and we can be flexible. And so I was willing to do that. I was willing to be flexible. And I'm so glad that I did, because there were so many, we have the opportunity to help so many more businesses because we are in the nitty gritty, right? So we set up accounting systems for our clients. If somebody already has an accounting system, we restructure it. with our strategic framework. We become the back end accounting department. So doing all the bookkeeping, the nitty gritty, really becoming not just a bookkeeper, but I like to call it the full accounting department for our clients' businesses. And then helping our clients stay out of freaking weeds. Because as a business owner, it's so easy for us to say, I need to have my hand in everything. I need to do everything. I need to understand everything. And you just don't, right? You don't need to do everything. So we help keep our clients at a CEO level, sending them reports, helping them understand the numbers, helping them put forth tax strategies, helping them put forth the metrics that they need to make better business decisions.
Okay, so you're kind of that bridge between someone who may either need a bookkeeper, actually, who may need that position, but maybe more specifically someone who might have a bookkeeper, but isn't at the place of business yet where they're going to hire on a full-time CFO. And so you're helping kind of bridge that gap. Am I hearing that correctly?
Yes. Yeah, no. So we don't work with other bookkeepers. So
Okay.
if you have a bookkeeper, we're not an add-on. We are the full accounting department. So you might be working with a bookkeeper. What I find most typically is my mom, my sister, my uncle, my aunt, the neighbor, the college kid, somebody around me who's cheap is doing my bookkeeping, or my tax accountant who kind of has a bookkeeper is throwing together my books throughout the year. So for somebody like that who has, some type of bookkeeper who you're not getting financial reports, they're not partnering with you. They're not holding weekly, monthly, or quarterly calls with you. They're not sending you financial reports, or if they are, they're not helping you interpret it. So you might be getting something, but we really help you take the information that you have to the next level.
Okay. And you're talking about monthly, you're talking about weekly, even you mentioned weekly, monthly, quarterly meetings. So what things, let's kind of talk about some of those KPIs in business, and just if you briefly want to touch on, in fact, actually, let's start here. Let's talk about some of the life cycles that we have in business. Cause I think as business owners, there's some first, like I just am thinking about my own process in business. There's like this, you have to figure out what you're going to sell. You have to figure out what you're going to offer. You have to figure out what corner of the market you're going to help serve. And so as a business owner, and in our industry, if you're in weddings and events, and specifically the venue, you might know, hey, I want to start a wedding venue, or you might know, hey, I'm a DJ, or I'm a planner, or whatever. So you know that you want to niche down, you want to figure out exactly which corner of that whole market, right? And then you got to start making some money. So let's say you get to, you're under six figures, right? $100,000 in sales. What are some really key, what are some KPIs that you'd be looking at as you kind of help business owners say, hey, this is the stuff that you're going to want to be focused on pre-$100,000 in revenue? Yeah.
Pre-$100,000. This is, you're establishing your business, and you're establishing yourself as a business owner. This is the time that it's really important for you to think about the habits and the structures, the systems that you're going to have as you move forward. The most successful business owners that I see take the time as they're establishing their business to really develop the back end of their business. So really separating business and personal expenses, making sure that you're an accounting system that you can grow in. Wave, Google Sheets, like those are not accounting systems that you can continue to grow in. So picking QuickBooks or Xero. So understanding the systems that you're going to put forth. And then this is also the time to start assembling your team. So we're usually one of the first hires for our clients, because they know that they can't do everything. And we can very quickly and easily, especially in this industry, come in and help our clients. So it's starting to establish what are the systems and processes. And I mentioned all of that first because the numbers that I'm going to tell you, you have to have an accounting system, and you have to have your business and personal separate. Otherwise, you're going to have a really, really difficult time getting this information. There is a report called the income statement or profit and loss statement. In QuickBooks, it's called income statement, but a lot of people call it the profit and loss. I like to run that report at least monthly, and look at that report on a monthly basis. Now, when we send this to our clients, we send it in several different formats. So no matter what format that you're looking at it in, so that might be your last 12 months, might be year to date compared to prior year. No matter how you're looking at that report, I want you to look at three numbers. It's your gross profit. So that's sales minus any direct costs. So any costs that go into you, not maintaining your entire property, but how you specifically have to serve your clients, depending on what that looks like. Now, I want you to look at this every single month. And by looking at it for the last 12 months or 18 months, you can start to see some seasonality. You can start to understand your business. And by looking backwards, you can predict the future. You can start to look forward by looking back. So that's your gross profit. The next one is your profit or loss. So going all the way to the bottom of the report, your net income or loss each month. So again, I want you to look backwards so that you can start to think about what's working as you move forward. So on months that you lost money, why, right? Like, why did you lose money? Did you have to hire contractors to come in and help you? Did you have an unexpected repairs and maintenance costs? Was it low sales, right? And really reflecting on why you had a profit or why you had a loss. That way you can start to adjust your behaviors as you move forward. And then the third metric that I like to look at is your profit and loss as a percentage of sales. And this is a really quick report that you can see where you're spending money.
So when you are looking at these different metrics, how do you determine which one is kind of like a bleeding need? Like, oh my gosh, if we don't get sales up, and probably, some of it a lot of it goes back to sales, but how do you determine whether something is like, oh my gosh, fix this ASAP, or that's interesting, let's evaluate this in the context of a quarter, in the context of, even a year, and be able to make those decisions going back?
So some of that's going to be your personal life. And I hate when people say it depends, right? But when you're scaling, when you're starting a business, you are in a season, and you are in a season where every month is not going to be profitable. You're gaining traction in your market. You are establishing yourself. You're establishing your brand. You're creating systems, processes. So this is the year that you're probably not going to make money. And if you are probably working 60 hours a week and don't have much work-life balance because you're not getting the support you need in your business. So I don't think there's any specific metric that I'm going to say you should close down or you need to change this activity right away. Now, if your personal situation says, I only have 6 months worth of savings, and after 6 months, my husband, wife, family is going to need me to go back to work or to supplement my income in another way, then that's going to change your behavior and is going to change the way you look at your income statement. If you have a little bit more wiggle room or freedom to be able to really build your business, then every loss, every big spending, every low or high month is really just an opportunity for learning. It's a data point.
Okay, that's huge. That's really huge. Let's jump then. So we're at the kind of $100,000 mark we were just talking. Let's talk now. Let's say we're doing about $500,000. Most of the venue owners that are going to be listening to this right now may do anywhere from 300,000 to $1 million, depending on what their venue is situated like, what pricing is like. There's a number of factors, obviously. And that's why there's a $700,000 gap there. But
it's a big difference.
Yeah, huge difference. But let's just take like the $500,000 mark, right? If they're doing about $500,000 in sales per year, are there some go-to, again, similar metrics that we talked about for the pre-100,000, pre-six-figure group? Are there some similar metrics or things that you're really advising your business owners to look at as they continue to chart and track their growth?
Yeah. So once we hit that 100, I like to even break it down a little bit further, like 1 to 250 and then 250 to 5, because that 1 to 250, we're establishing a team. We're really getting to that point where as a business owner, we can't do everything ourselves. We're starting to hire on employees to help us serve our clients and help us run the venue. So in that, we need to continuously monitor our payroll costs. And I'll go back to the percentage of income report. So there is, when you look at your percentage of income report, you can see how much of your sales are going to each category in the income statement. And here we pay special attention to our cost of hiring and then what we're paying ourselves as owners. And that is a number I want you to look at every single month. So the total cost of payroll includes contractors, employees, employee taxes, and then anything that you need to create a culture. So maybe continuing education, 401k, benefits, and then what are you paying yourself as an owner? And then tracking that as a total, and then as a percentage of sales. And now this is something that should be tracked every single month and evaluated. Does this meet my goals? Because I mentioned before, all profit isn't created equally. We can have a really profitable business, but we're doing everything ourselves, running ourselves into the ground. So you might look at somebody else who isn't as profitable as you, but they get to, have dinner with their kids once in a while. It's not created equal. We've created an environment where we have people, systems, processes that can support ourselves in our business. Does that make sense?
Yeah, totally. It totally makes sense. At this point, then it sounds like the systems that you set in place should be working. The systems that you set in place at the $100,000 level to 250 should really be working. So at the $500,000 level, you can start making more predictive decisions based on the history that you've seen, based on that team that's now up and running. Am I hearing that correctly?
Yeah, absolutely. And you'll miss the mark if you're not watching this information. So by listening to this podcast right now, you're doing yourself a favor. You have an opportunity to start looking at this information, and don't just look at it, or just don't say, I updated my QuickBooks, so bookkeeping's done. It's the act of reflecting on it. So, looking at the numbers, looking at the payroll costs, and asking yourself, what worked, right? Like what worked this month? What didn't work? What was my energy like? Right? Does this feel like a good mix of where I want to continue in my business? Are these still the right systems, processes, procedures, and team members to have in place as you continue to scale? So this is the time that we're establishing a cadence of looking at the information. And that's why when we work with our clients, we offer that opportunity for a call. So whoever it might be, maybe it's your business coach, maybe it's your bookkeeper, most tax accounts don't do this, but your accountant, determine who you're going to meet with on a regular basis that's going to hold you accountable to looking at this information, because creating that process, once we get to a $500,000 in revenue, that's an established business, right? We are growing, we are rocking and rolling, and we have the good habits in place to build upon. So we're looking at the P&L and the balance sheet every single month. We're tracking our payroll costs. And then here we can start to add on other KPIs. And those KPIs might be customer acquisition costs. So how much does it cost us to acquire each customer? There might be other metrics that are going to help you meet your personal goals. So I personally wanted to make X amount of money per year. Where are you at hitting on that goal? So key performance indicator around that. How much money am I spending in professional development and education of myself and my team? So looking forward, what are my goals? And then creating the metrics that I can build onto the other KPIs that I'm already looking at.
Totally. Yeah, that makes a lot of sense. I've got two questions for you. And so the first one really is kind of like a tactical question for business owners. And I think regardless of if you're in the wedding or event space or not, this is a relevant question. What is the financial team? Who are the players on a financial team that you recommend small business owners have?
Oh, love that question. I call it the money team. I want 3 people on your money team at all times. You should have your bookkeeper, and not all bookkeepers are created equal. It should be a bookkeeper who sends you financial reports and meets with you on a regular basis. If that's not what your bookkeeper is doing, ask for it or start shopping. your CPA or whoever's filing your taxes. So there's a lot of language out there. Not all CPAs file taxes. Not all tax accountants are CPAs. So you want to find a CPA who will be filing your taxes. And if they're only meeting with you once a year, starting to start shopping, your CPA should be meeting with you throughout the year. So at a minimum, I like the summer check-in or Q3 check-in, and then a time to review your tax return and any tax planning strategy. So you have your bookkeeper and your tax accountant. The third one is your financial advisor. And I believe that everybody should have a financial advisor. A lot of people will say to me, I don't have enough money. I don't have a net worth. I'm not enough. My business isn't enough. You are enough, and you need to be planning for your future. We're always encouraging our clients to look backwards to look forward. And we can't do that if we don't have a financial advisor who's helping you look at the other pieces in your life. Your business is probably your biggest asset, but it can't be your only asset. So we have to look at your holistic financial picture. So I believe that those should be the 3 people in your money team.
Okay. And that's so tactical and so practical. I love that. Thank you. Thank you for that. You brought up a financial advisor. For a financial advisor, how would you recommend going about and finding someone? And are there maybe a couple of questions that you would always ask this person if you're interviewing them to figure out if they're really a good fit for you?
I think the most important thing to find is somebody that you'll actually talk to. And this is for all 3 roles, right? So CPA, bookkeeper, financial advisor. I can't tell you how often I'll talk to a business owner. They're like, yeah, I have one, but I hate them. I'm like, well, then why do you work with them? Or I haven't talked to them in years, but it's easy enough for me to send them my stuff and them to, get it done. You have to find somebody that you want to call, right? They're supposed to be somebody that's in your corner. They're supposed to be rooting for you. They're supposed to be helping you meet your goals. Now, if you are somebody who's not returning their calls or emails, you might be the problem. So self-evaluate first. We have a lot of clients who just never answer us. We're like, hello, we're here. Talk to us.
Probably because the avoidance, right? Like you said in the beginning. Yeah, totally.
Yeah. I have to coach my team all the time. I'm like, it's not you, I promise.
You're like, they're not calling because they're afraid.
They're afraid. They're avoiding you. It does nothing for our self-esteem as accountants. There's no specific questions. You want to make sure that they have the right certifications, that they are going to help you meet your goals. If you are somebody who really likes the weeds, right? Like you love the details, the nitty gritty, you want somebody who's going to walk through every single detail with you. You got to find somebody who matches that personality style, right? Because you might find somebody who has a personality style of very high level and overview. They want to just control it for you because that's the type of client that they fit best with. Not going to be a good fit for you. You need to find somebody who's very detail oriented, is going to walk you through every single detail, or is able to mold to both personality styles. But that's it. Find somebody you actually want to talk to.
That makes a lot of sense. My second question is more of a, it's very specific. It's a very specific question because I've been curious about where to draw the line here, specifically for wedding venues and just, I think wedding venue or wedding businesses as a whole, businesses in this industry. You've got cost of goods sold, and then you've got your expenses, right? And usually, if I'm not mistaken, the cost of goods sold comes before the overall expense mark, right? Because it's kind of what you get to get your gross revenue that you then use to understand your net revenue.
Yep.
And I am not an accountant. So if my bookkeeper is listening to this right now, she'll be groaning. But how do you decide which things are cost of goods sold and which things should go underneath that line? How do you decide which ones are which, especially in the case of a venue where you're spending money for marketing, you're spending money to acquire the client, but then they're actually not going to get married sometimes for 9, 12, 16, 18 months, something like that. How do you break those 2 things down?
Yeah, I think it's a personal question. So For most small business owners, you're not following what we call GAAP accounting. So you're not buying product and reselling it. So there's a little bit, there's not as much clarity here. There's some bookkeepers, some accountants who will say direct labor should always be a part of cost of goods sold. So anybody who is working on an event should be direct labor. And anybody who is working as your admin staff, marketing staff, you, the business owner, should be below the line. Now, what I find happens in small business is, Joe Schmo spends 50% of the time in admin, 25% of the time in marketing, and 25% of the time at the event, right? So at no point should any business owner be spending any amount of time dividing up people's time, right? So for most business owners, we will lump everything together below the line. So we call it below the operating expense line. So it's not in cost of goods sold. It's down with payroll cost. And it will include contractors, employees, and an officer salary. And there might be some breakdown, right? Your operations manager, your administrative assistant go into a specific category, but they're very clearly operations. And maybe your marketing person who you've hired or outsourced, their costs can be very specifically categorized to a separate account. I don't want anyone to get too hung up on what's direct and what's not direct. The same thing with supplies. This is the other thing we hear in this industry a lot is, I have to buy a lot of supplies, but some supplies are going to be used by my team in marketing, and some supplies are going to be used for the events. And I'm not going to sit here and divide up my receipts by what's going to the event and what's going behind the scenes. So we create one category called supplies and materials, and we decide together. When we work with our clients, we decide together where we're going to put supplies and materials. If most of our supplies are related to the event, we call it cost of goods sold, and we don't spend time and energy trying to nitpick it apart.
Okay. I love that. Such a good answer. Such a good answer. And we're going to be chopping up a lot of this content in little kind of itemized pieces, because I think stuff like that is so tactical. Like, people need to hear that. People need to be reminded of that. So this is all really, really great. So I want to ask, we've been primarily talking, or I've been kind of phrasing the question primarily towards business owners who are starting. And let's say they're lucky enough to find you, or, a company like yours, or really an awesome, that 3-person team that you were talking about.
Yeah.
They have that started early on, or maybe even they come from a financial background. So they are a CPA, and then they add those other pieces in, right? What about the person who is just finding this podcast? Their business is already doing about $500,000 to $700,000 a year, somewhere in that range. They're pre-million, but they're doing pretty well. They're paying themselves at least a little bit. They've got some team members. Like, their business is going. Sure, there are hiccups. Sure, there are problems. Things aren't necessarily organized financially, but they're paying their team, and they have QuickBooks, but it maybe is not optimized. So they're kind of intersecting this conversation and getting set up properly financially, right in the middle. What is the first or second thing that they should be focusing on as they're looking at maybe their goal for 2023 coming up here is let's get our financial house in order. Maybe even they're thinking about selling eventually at some point.
Yeah.
What do they need to be looking at right away? What's the biggest rocks that they can take on immediately?
So first of all, I just want to say you're not alone. This is more common than I would like to admit. That businesses who have been in business for years and are doing very well without having these fundamentals in order. So, don't be hard on yourself. You're not alone. The first thing, this is going to sound really simple. Make sure you're in an accounting system. Make sure you're looking at the damn information, right? Because if you are moving along, running your business on gut, but doing well, right?
Yeah.
We have to kind of pull back a little bit, and we have to create the habits around this function of the business. And the first habit we have to create is stop avoiding, right? We need to embrace the new habit and start looking at this information on a monthly basis. Now, this is also, you made a comment about thinking about selling your business in the future. This is around the time that we start to hear our clients say that they're thinking about not actually selling their business, but being sellable, right? Having the structure put in place in order to be sellable in the future. And that goes down to systems, processes, and having really clean books. So a rock might be, getting your bookkeeping in order. Make sure that your QuickBooks is set up and it's set up correctly. Your chart of accounts is clean and consistently used. Everything is categorized consistently. You're not commingling business and personal, right? You're keeping those very clearly separate. At this point, you should probably be an S corp and on payroll, so you're paying yourself via payroll, and starting to think about running your business like you are not the only one in your business, right? You have to start running your business like you're an investor or you are the CEO running the business. And when you're the CEO running the business, you're not putting your personal expenses through the business, right? When somebody comes to buy your business, they're going to want to see a clean set of books. And then, this is not necessarily accounting, but I like to mention it. This is also the time to start thinking about standard operating procedures. What does my brand do? How does it do it? And what is our process? What is our methodology? And that, bookkeeping is just one of the SOPs that we have, right? The standard operating procedure SOP, but we also have it for how do we hold an event? How do we maintain our property? How do we plan an event, right? Really getting everything out of your head as the business owner, making the business not about you, but making it a business about your brand, your system, your processes, your team.
I love that. I so love that. And I think that it's a weakness for people in our industry because people are so creative. People are so talented. People do oftentimes run their business based off of their gut. And I know because I did that for quite a while. It's like, I generally know there's enough money in the bank and I know what next payroll or two looks like. And, you can keep running a business like that for a while, but that's not a business that you can sell and not a business that really has tons of strength to it. And so that makes so much sense. Well, Danielle, thank you so much for just coming on and sharing some of this. And I'm really hoping that people, this is maybe a gateway to people really getting more financially savvy and, becoming unafraid. Maybe this is the kick in the pants they need to call you or start doing some research. And, like you said, it seems like if we don't have a CPA or a bookkeeper who's creating those reports for us, who's doing the regular meetings, like it's time to start looking. And so if people do want to connect with you or your team and they're interested in kind